Hi everybody. Welcome to another episode of Stock Talk. My name is Amin Reina. I'm an investment coach here at Sage Investors. This is episode 34, and today I want to talk a little bit about robo-advisors, specifically my portfolio that I created with a robo-advisor. If you've been following any of my blogs or any previous episodes of Stock Talk, I've talked a little bit about this experiment that I'm running where I took about $5,000 of my own money and set up an investment account with a robo-advisor. And the basic premise is we hear so much about these robo-advisor services that, you get this computer, it's going to manage your money, low cost, bunch of ETFs, and you just sit back and, next thing you know, you're going to have a whole bunch of cash in your pocket. Well, it's great. That's great. The premise seems to be great, but there hasn't been a lot of discussion about, about the performance. It's just amazing. People are putting so much money into these things and really have no idea if these things actually perform. So, as I said, I just doing my own little experiment, trying to answer that question as best as I can with my own little portfolio. So today I just want to give you a bit of an update because I just posted on my website my latest update, my latest blog on this little process that I'm doing. So I just want to share with you some of the latest findings from the last few months. So, give you some numbers first. Year to date, this is as of June 10th, and we know that there's been quite a few things that have happened in the last couple of weeks since I put these numbers together. Year to date, up to June 10th, my portfolio had generated a return of 2.28%. Since the January correction, remember the stocks really crapped out a bit in January, the portfolios have been up 5%. And since I started doing this, creating this portfolio. This was back in January of 2015. The portfolio has been up about 2.7%. So, it's sort of meh, it's there, it's doing something, and that's fine. There's been some improvement in terms of the nature of the portfolio. Back in January, actually, all the ETFs in the portfolio were all down. They were all in the red, but now there seems to be some green shoots. For example, the real estate component of the portfolio, which was down 15% in January, is now down only 3.8%. The dividend component of the portfolio, which was down, I believe, minus 5.5%, is now actually up. It's actually up plus 3.2%. During the last few months, there hasn't been any sales in my portfolio, which is one thing I really watch, because one of the things I get concerned about is, do these portfolios, do these computers or algorithms like churn the portfolio? Are they constantly selling out of things and getting into new products and stuff like that, which kind of generates commissions and fees, and that's one of the things we want to avoid as investors, is trying to minimize our costs. So far it hasn't been any sales, so that's a good thing to see. It's only made 2 real transactions. It added did a little bit of rebalancing and added some additional shares in the US ETF component and in the emerging markets component. Some other observations that kind of came out in the last few months that I've seen is, so far since I started the account, set up the account in January 2015, I haven't had any contact with a human being. Basically, all my interactions with a robo-advisor have been through email. And I wanted to kind of share with you a couple of interactions that I've had, or attempts, I guess, that my robo-advisor has tried to initiate with me, basically offering me products. The first email I got was about the robo-advisor was offering up this new type of portfolio, which was called a socially responsible portfolio, which is, I guess, kind of targeting a lot of the millennial crowd who are looking to invest in more socially responsible companies that are trying to do good in the world, trying to be environmentally conscious. So my robo sent me an email saying, hey, you know what? I got the socially responsible portfolio. It consists of a whole bunch of ETFs that track very responsible, corporate responsible kind of companies, and say, hey, you want to invest in it. Now, they said, they provided the proviso, is that this type of portfolio is going to be more expensive than your basic core portfolio. And the fact that they were upfront with that is kind of cool. I appreciated that. And but the thing that jumps out at me is, and this is something I really didn't, I really think about, but now I think I'm going to probably pay more attention to it, is that we're probably going to see a lot of attempts to get people to bring money into these robo-advisor services, but once they get in, then I think what you're going to start seeing is a bit of the upsell, and that is, they've lured you in with basically low-cost kind of core portfolios, but then they're going to kind of say, you know what, you might want to put some money into this line of products. You want to put some money into, like, obese kind of ETFs, or I don't know, I'm just making stuff up. And I found that interesting. I'm going, you know what? Is that the kind of the core business plan of some of these robo advisors? Is just to kind of upsell us. So that was one element. So that was one interaction I had with it. The second one wasn't really an interaction. It was something actually I found out about my robo advisor through Twitter, and that was that they were offering. And it kind of hit me close to home in terms of my practice. Is that my robo advisor basically announced that they are getting into the portfolio evaluation business. And basically all you do is you send to them all your financial statements, your portfolio, your documents, whatever documentation related to your portfolio, and they will analyze your portfolios and give you a recommendation and kind of give you that supposedly just professional interpretation of whether your portfolio is properly diversified, is it keeping costs in line, those type of things. And first thing I noticed is like, whoa, wait a minute, that's a type of service I offer in my practice. It's not a huge part of my service, my practice. It's there. If people are interested, I'm happy to do it. But I just found it interesting. First thought, I was like, whoa, am I getting disrupted? I guess my business is getting disrupted by a robo-advisor. And I go, I guess that's possible. And the thing I forgot to mention here is that they're offering this service for free. So, whoa. So it's kind of hard, for me with the practice to compete with free. But I'll get to that in a second. But what I found interesting, though, that kind of, the proposition of the service to me is good. I'm offering it, so why can't anybody else offer it? But I think what I found interesting, though, was the fact that the process involved is that basically they're asking you to give you all your personal financial information and upload it on a computer, through the servers, and they're going to take that information and analyze your portfolio, which is great. But the question that comes out to me is, okay, what else are you going to do with this portfolio, with my information? Are you going to use it to build a profile of me or a typical demographic or investor and then start selling me other products? And to me, the whole concept has got a little bit of a Facebook-y kind of thing. Like every time you click the like button, then all of a sudden you see all these like ads and things like that are because you like that thing. You're going to see like 50 ads about that. So to me, I found that a little bit concerning and a little bit worrying. Is that it just doesn't seem like the way. That's something I wouldn't do. Like the nature of when I offer my services, when I'm done analyzing someone's portfolio, I usually just delete all information they've given to me. I'll even give back if they've given hard copies of financial information. I just send it back to them, or I'll just shred it. I just don't believe in that's just the nature of my practice, and the nature of what I do is I don't keep things and throw things into databases when I should be and mining it to sell people other products and stuff like that. Kind of not part of my brand, but that's me. That's my practice. So. And at the end of the day, competing with other companies, and so to me, it looks like a little bit of a kind of a lure people in with the free, and then kind of give them a captive audience to sell their higher priced products. And I don't know, I found the whole thing a little bit disingenuous. But it's a bit of an eye opener, because now it's something I'm really going to start watching a little bit more, especially with my robo advisor, and I'm happy to share it with you all and my experiences with it. Is just these are things you just need to be aware of when you're looking at a robo advisor service. It's not just cheap portfolio, I don't have to do anything. Well, there is a bit of work, and I'll talk about it in future issues and future episodes and blogs and stuff like that. But I just wanted to share with you. So that's pretty much my update, and it's really this whole upsell thing really is a new development that I've seen now with robo advisors, and something I'm really going to keep a close eye on to see if this is kind of the norm now. And in a way, it might be the norm, because you see it with cell phone companies, cable companies. They do this. They do pretty much the same thing. Banks, traditional banks do this. The whole upsell concept, trying to get you into other products, and so they can generate more fees off you. So something to keep in mind, something to look out for. You can go to my blog on my website, www.sageinvestors.ca. I have my blog posting, so you can see all the numbers, all my stats, and my comments a little bit more detailed. That's all I got for you. If you have any questions or anything like that, you can shout through my website, or you can hit me through my Twitter account at Sage Investors. I'm tweeting about all kinds of different market observations and things that pop out. Even while I also tweet out all my own personal investment decisions and my mindset, what I'm thinking when I'm making these decisions. out there. So it's all out there. So that's all I got for you, and that's pretty much it for Stock Talk. My name is Amin Reina from Sage Investors, and we'll catch you again another time. Take care.